Welcome to Catfish 2.0. Tesla and China become partners on car production. In particular, we're looking at today how Tesla might do in the Chinese market, which turns out to be the most important market for the company of any of its places, because clearly the anticipation is that Tesla will sell more cars in China than anywhere else in the world starting the latter half of this year. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. Your support is greatly appreciated. If you'd like extra shows, daily trade and chart processes to help you in your trading process, please join us on Patreon. I think you'll find the information helpful. Please note the $125 level a month gets you everyday shows as well as charts, etc. And then the lower tiers, there's a reduction in number of shows that are extra that we do during the week. So we're a little bit challenged here because we've had a few planes fly out here, but we're going to try to work through it here a bit. So there's a concept that was shared with us by the head of sort of EV for China, which is something called catfishing. So we did a show about this approximately a year ago to sort of set up this discussion, because there's this open question of why would China want to introduce Tesla into its EV marketplace when you have the potential for Tesla to put all of these Chinese companies out of business. And so the answer that came up from the EV head of China was, well, we're doing something called the catfishing process. So when I looked up what that meant, what we found was that there's a ship captain in Norway, and he could optimize his price on sardines if when they returned to port, they arrived alive. So the problem they were having is if they simply put them in the holding pen and bring them back to port, the sardines would freeze and therefore garner a lower price at market. What he found out, though, was that if you put a catfish in the pen with those sardines, the catfish might eat a few of the sardines, but all the other sardines staying alive meant he got more money for his catch. So the Chinese government official was explaining this catfishing process was the idea they had in mind in bringing Tesla aboard. So I was kind of surprised by this, and particularly kind of this year with Tesla dropping price low, we've sort of seen the impact of first Tesla selling a lot of cars, and then secondly, a lot of manufacturers having difficulty competing with Tesla as it entered the marketplace. There's one teeny little data point that when it was announced by Elon, I was surprised, but then I'm starting to get it now that we're doing what I call catfishing 2.0. And that data point was that Elon announced that by the end of last year, they would be at 100% supply chain within China by the end of the year. So then I was like, wow, there's low risk here for the Chinese. They're building a factory to help Tesla go. Tesla is making a lot of money, a lot of growth driven by this. And a negative for China potentially is that their domestic firms might lose sales. But if all the jobs pretty much related to the cars produced in China, and then all the suppliers and their jobs produced in China, this is kind of a win-win situation for the two companies. And so therefore, it kind of makes sense what's happening. I'll also remind you that without China and what's going on in that factory, there's a decent possibility Tesla would be bankrupt by now because of all the things that were going on. When they got the money to build that plant, they actually were not, the stock price was fairly low, things weren't going well, and all of a sudden, all the Chinese revenue, etc., started hitting, and the stock price has gone bananas as a result, including the anticipated number of sales that will go on over the next several years. So this show kind of has three parts that don't typically end up being how we do shows, so you have to bear with us. The first part is to review how Apple's activities influence what's going on with Tesla and China, number one. Number two, there's this crazy data point that I've been trying to figure out for the last 4 or 5 months, could not do it, and finally have the answer with this show. And that was, why are there a whole bunch, right now there are at least 2, if not 3 companies that are starting up their EV operations in China? And that'll be answered in this show. But that question was one of the biggest reasons why we did the research to be prepared for this show. So, and then obviously we follow on with what we think are conclusions off of this in phase 3, which is really looking at battery and other things that are affecting things. So the second part of our discussion right now is, what is the deal with Apple and China? Answer: the article that we read from Nikkei indicated that there are 360 suppliers that Apple uses in China that that once they built that supply chain, they were providing leading edge information and technology to those companies. And as a result, all those companies are doing well as they sell to Apple as part of Apple's supply chain. But additionally, there are a number of Chinese manufacturers of cell phones that are able to go to that same supply chain and produce phones with Apple's core technology, and therefore be able to sell a ton of phones. There are at least 3 companies that are listed, and we'll include a photo of the article so you guys can read the whole thing yourselves. But basically what we're looking at is the fact that all of a sudden the model that China is using for Apple, or has used for Apple, is the same model that they're planning to use when it comes to Tesla. So the next phase of our conversation is, well, wait a second, how can 3 brand new EV companies starting up compete with Tesla and other global suppliers for sales in China and elsewhere if they're just a startup? The answer is replication of the supply chain of Tesla within China makes it very easy for them to get into business and be doing so at a rapid clip from the start. So therefore, like there's one company I saw with $1.5 billion that was raised and starting to be implemented the middle of last year. And I was scratching my head because, you know, the auto business is challenging. It's challenging to get in, economies of scale. There are all these variables that can influence whether or not you're viable. But you have all these Chinese companies deciding to enter this business. And I was like, well, why would you do that? And the answer is Catfish 2.0. So what we're talking about in Catfish 2.0 is whether it's cattle for batteries, whether it's LG for batteries, you know, as obviously the core component of this whole thing. And then we move on to all these other elements. There's an E which 17 parts is a small number of supply chain elements that you have to acquire to be competitive, and you have the guide of what Tesla's ordering in order to determine what those parts are going to be for your entity. So therefore, this is the answer to why we're seeing new entrants into the Chinese market that are domestic manufacturers. A sidebar note here is that I actually have a former client who's a Stanford professor, and he specialized in health issues. And one of the sidebar data points on China is like 90% of the men in China smoke. And part of the deal on that is that all of the smoking or cigarette companies are owned by the Chinese government. So the government actually has certain rules about how many packs of cigarette are required to be purchased by certain individuals, entities, and all the way down to the individual on an annual basis. So this high smoking rate is consistent with a very profitable system for the Chinese government. One of the things that's going on with these EVs and cars, etc., is Elon has talked about the fact that he's actually going to go ahead and build new Tesla factories in different regions of the country. And I think this reflects the fact that the local or regional governments can not only fund entities, as we're seeing with Shanghai and its relationship with the Chinese government to get the Teslas rolling in Shanghai, but other regions can put screws on manufacturers, etc., to force them to actually buy entities that are produced within that area. So, I just wanted to note to you that if these vehicles are being built in regions where there are no other manufacturers, that local government could require large numbers of sort of local state entities to purchase the vehicles produced in that region by workers in that region. And so that's one of the things I'm expecting to happen in terms of how competition faces up against Tesla. So the question that comes up is, do we see a breakout of this whole thing consistent with how we see cell phones working? And I would say because of this supply chain share that the Chinese companies are working on doing with Tesla. And I think the answer to that is absolutely. And I also expect that everything you see on the manufacturing floor for Tesla will end up on the manufacturing floor for their competing firms as well, given that in many cases, there's a lot of government entities that are driving. You might see me looking around because we're in Florida and we're not on the side where alligators exist, but there's all kinds of interesting creatures I have not seen before and therefore don't want to see them run me over. So I apologize for that. So we're in a phase now where the Chinese manufacturers are easily able to replicate the competitive advantages through technology and research that Tesla has done and implement well. So the question that's popping is, well, wait a second, if they're replicating the supply chain, if they're putting everything Tesla has in its cars except for the control software relative to the batteries and the fact that they don't have the charging networks that's nationwide, which aren't minor issues. The general point, though, is that the Chinese manufacturers are in general starting to generate their own ability to, hello doggy. The Chinese manufacturers are definitely able to now engage in a process where they can start to cut the competitive advantage of Tesla. So the question is, well, how is this going to play out over the next 2, 3, 4 years as these sectors that Chinese don't have down yet, they refine their processes? And I guess the answer I would share as number one is the fact that the new battery, the 4680 from Tesla, CATL has applied for permission to produce that battery. LG has also applied, but at this point, only Panasonic and Tesla are prepared to produce that battery. I really think that, particularly in the case of LG, Tesla will have no choice but to bring LG in as a co-manufacturer, which will then open up that battery's innovations to all the other OEMs around the world. And the reason is volume. If the 4680 is designed to allow a $25,000 vehicle, in theory, you're going to have very high volume for that lowest model Tesla. And the question is, hey, if you need all those batteries and you only have one big factory, how in the world are you going to produce enough of those to feed the beast, if you will? And one answer is both Berlin as well as Austin, Texas are going to have a gigafactory next to them to produce batteries. So in theory, that's one way that answer could happen. The way I see things is that the Japanese production or Panasonic production is going on in Reno might expand to encompass batteries or even start switching lines from what they're currently producing, the 2170s, over to the 4680s, and therefore you can cover this in a number of ways without going to sharing your hard-earned and developed over years technology with competing entities. So we'll see how this plays out, but one way to sort of blunt the fact that Tesla had to get this help from the Chinese to get where it is now is this. The second way is what I call the chip miracle that's going on for Tesla. As you know, right now there's a shortage of chips, and I really think there's a quote-unquote mystery that's hanging over the entire auto industry that I have to say I don't know the answer to, but I kind of know the questions. So the question right now is, a lot of auto manufacturers have done a process where they're shutting down production of low-end vehicles in favor of the high-end vehicles of highest profits, and they're literally storing pickups and other large numbers of vehicles in lots until they can get the chips that would feed that vehicle. So the question hanging over the industry is, well, wait a second, we need chips in order to finish off our vehicles, and because of what we talked about over the last few weeks of them shutting down orders for chips last year, those folks now have to get back in line to try to get chips. But there's a supply constraint on chips, and that is what's called the $20 billion factory. So basically, I was told, there's a friend of mine who has a PhD from Georgia Tech, and he broke down how Apple is the largest sort of single person that orders chips from TSMC. The chips coming from TSMC typically are the most advanced or the smallest wafer. The reason you want the smallest wafer is the smaller the wafer, the less power it takes. So if you want to optimize on power, kind of Samsung and TSMC are the primary manufacturers of the smallest chips. But what's happening right now is that there are little problems with expanding. For example, a chip Apple is doing a routine where they actually have, they've spent $500 million to add a manufacturing line and the equipment that it takes to produce those chips to the TSMC facilities in Taiwan. And so they're not building their own factory because that would cost a lot more, and they'd have to train people to produce those wafers in those fabs, which they don't. But as you can see, they're stepping up the supply chain, and once they get big enough, they'll probably just build their own facility and manufacture their own chips. But the amount of capital it takes / the amount of trained people it takes to make that work is even too great for Apple, and they're the biggest order. And according to what I was told, Apple, when they order chips, the way it kind of works is that you have a large manufacturing facility. You put in, this building was built for X number of dollars. What happens is that 1 year, 2 years in advance, you will have manufacturers, in essence, buy production slots on the manufacturing lines of all these manufacturers. So for example, in the case of Apple, with its relationship with TSMC, I was told that Apple could end up, in essence, buying the factory out of TSMC for as long as 4 months, if not 5 months of production, because of how many chips they consume. So one of the question marks that's out there is, now wait a second, a building like this can take a couple of years to put together as well as to get supplies necessary to run it. Now, how is this quick turnaround, we only need 6 weeks before we have enough chips to put out these trucks, going to really happen? And I really think the answer to it is that a lot of people who thought vehicles may be delayed in their finished production process by a few weeks, maybe a few months, I really think there's the risk that this actually could push out a year, maybe even a year and a half before all these vehicles, there's a catch up between chip production, etc. So I believe that one of the Tesla miracles is the fact that you have all these competitors ready to compete, and they've got small numbers of vehicles ready to go. But the problem is, what do you do about the chip shortage relative to all their vehicles? And if EVs are a loss leader that they're trying to get going as a manufacturing process, it behooves them to use their chips in the highest margin vehicles that they have now and delay growth in production and sales of EVs until they can get sufficient chips to meet the needs of all their vehicles. And this, I think, is really helpful to Tesla because it leaves all those potential buyers out there without a better option than Tesla until the folks can get their chips situation figured out. By the way, Tesla definitely has problems with chips like everybody else. Elon has talked about it. they have stayed in line and not given up, and therefore have chips to fuel their current and short-term growth. But Elon has even talked about perhaps buying facilities or building them to address this shortage short-term and long-term. But I think what it means is that Tesla ends up with good to very good numbers this year, but with the growth of both demand and their manufacturing elsewhere, I don't think we see blowout numbers because of this problem. And I mentioned in another show, I think Tesla's going to end up shipping chips over to the Plaid and away from Model 3s, simply because 2 or 3 times the profit per vehicle makes more of a difference for the company. You just slow down deliveries to Model 3 owners in the process to get this done. So the bottom line is, yes, there's a problem for Tesla in the catfishing process relationship that they have with China, but through some luck, COVID and slowdown of chip production and other sort of advances that Tesla has, it's further institutionalizing its lead when it comes to delivering vehicles, and I expect they're going to do great numbers and deliver a lot of products that put them ahead of competitors, while competitors are slowed down by a number of issues, in particular their ability to get a hold of chips. So the goal of this show is really to explore this whole question of catfishing. In Catfishing 2.0, the Chinese government was anticipating being able to leverage the Tesla supply chain in order to all of a sudden start producing competitive vehicles across a number of manufacturers. This is starting to occur, but the chip shortage is slowing down this transition, and that's a good thing for Tesla. So in general, you can say it's a win-win situation in terms of what's been going on with the relationship with China, but it could turn lose-lose if the Chinese finally deliver great software that provides 300 to 400 miles of range, get enough level 2 and 3 chargers out there. This could become a very challenging battle for Tesla. Hence, they need to seed the market with as many cars as possible before the onslaught of Chinese competitors hits, a la what's going on in the cell phone space. So, at any rate, I hope you found this discussion of Catfishing 2.0 useful. Right now, Tesla's ahead and doing well, but there are definitely variables that could influence how well this all goes down in the short and long term. And I think the 4680 is a big part of Tesla maintaining its competitive advantage in that space. So we want to remind you, we have a few extra SpaceX shares. If you want to purchase that, we also want to encourage you to consider joining us on Patreon, as well as liking and subscribe. And then we also want to move on to our health tips for the day. As you might note, you can hear the water behind us. We're actually doing a show right on the water. We're in Florida, in the Tampa area, and very nice circumstance here early in the morning. So we want to move on to our health tips. Don't forget your 25 leg lifts a day to reduce the chance of knee issues. We also want to encourage you to consider a 5-2 or other diet related to fasting. The easiest one I found from our doctor references is to consider doing eating on half the calendar. So eat for 12 hours of the calendar for the day, not the other 12 hours, giving your body a chance to rest and rejuvenate, etc. Some others that are not listed, we've talked about a Japanese concept of forest bathing. You might want to look that up. It involves getting out in nature and enjoying. And then we also want to encourage you to eat a small salad or something light prior to lovemaking. This will enable you to minimize the chance that your blood flow will be too heavy to your stomach and not available elsewhere. At any rate, this is Greg for Teslafaninsight. Tschüss German, au revoir French, Lehitro Hebrew, Hoda Hafez Farsi, Strazviche Russian, Ni Hao Ma Chinese, Konbanwa Japanese, good day, our friends in Australia, Heido, our friends in Sweden, Strazviche Russian once again. And in Jamaica, we say, "Nuff respect, walk good man." Thanks for joining us and have a great day. And bye for now.